Welcome to TheoTRADE. This is Don Kaufman. It's January 31st, 2025. Just about 45 minutes are left in this trading week. Yeah, can you believe it? That's all that stands between us, of course, and the weekend. It has been a long week. I mean, for 5 trading days, this has gotten intense. Of course, referencing Nvidia, which completely crashed, and the market rotations that have kind of followed, I really think hide the real risk in this marketplace. And that is going to be at the center of discussion here in this TheoTRADE weekend update. Allow me to explain exactly what I see, and I'm going to try to lay it out for you as cleanly as possible. There are, and I like to state this right up front, considerable risks that lie for the entire marketplace dead ahead of us. And although I'll zoom out for a second in the chart, and the argument is, oh, come on, we're sitting basically at all-time highs. Yeah, we're going to discuss exactly that. And I'm well aware that we are sitting at or near all-time highs. However, Nvidia has changed a significant amount in this marketplace. So let's start to break down just a little bit of the action that we've seen from this past week of trade. As I said, it's been a long week. It really has been a long week. I mean, even starting over the weekend, you knew DeepSeek was going to cause some issues in the marketplace, early on in the week. But let's go to the 30. This is a 30-day 1 hour. When I'm talking about some issues earlier in the week, we just, gap substantially lower on Monday. We've been ripping pretty much ever since until we hit what I would term some tariff volatility right now. But with that being said, let's start to explore this. Okay, first and foremost, Nvidia. Let's just jump right to it because really this weekend update here, it's not just about Nvidia. Okay. Nvidia just basically kicked out, if you will, the largest tentpole in the marketplace. And I am a firm believer without performance out of Nvidia, you don't have much in terms of tech. Again, to explain that in a bit more detail, so you're taking a look at Nvidia, and if I'm using the term, Nvidia crashes, you'd say it's kind of a strong, strong point of view. But on a year-to-date percentage, it's kind of an interesting way to look at it. A year-to-date percentage, Nvidia has been up, 8-10%, and now is effectively down 12.5% a year-to-date basis. So if you just looked, okay, it was up 8%, now it's down 12%. Okay, it's off just from last week, roughly 20%, which does constitute kind of a crash in a particular, underlying, especially when it's the single largest market cap. The most shocking aspect of Nvidia kind of taking the hit, and again, kind of reverberating volatility throughout the marketplace, right? So Nvidia takes a hit. The S&P futures that day, down 100, 130 handles. They recovered towards the end of the day. Clearly, the damage was done. Nvidia kind of stabilized. What you saw, and I think what a lot of people miss, though, in this is just some really wild kind of rotations. And that is, for every ounce that Nvidia was giving up, there were a handful of other stocks that were popping to the upside. The easiest one, of course, to point out is none other than Meta. Meta on a year-to-date basis is now up roughly 15%. Okay, and the price action in here just went parabolic to the upside. A lot of people are questioning, well, why did it go up? Is Meta, and by the way, look at this from the point of view of what we term expected moves. Okay, again, this is before its earnings, this huge burst back to the upside, its earnings taking a little bit higher here. But why is Meta the beneficiary of Nvidia kind of falling? The answer to that is not found in fundamentals. The answer to that is actually found in, it's just money rotating. And I thought that out of Nvidia into Meta was a great example, but it wasn't just Meta, right? You know, you could point out like, all right, here we go. So Broadcom also took a hit and it recovered a little bit, but it was also into other sectors. One of the areas that people are not paying attention to is the financials, which we're going to talk about pretty extensively here. Okay. This became out of Nvidia and it became what we term the rotation game. It's like this, you know, wild game of kind of musical chairs. And we've seen it a tremendous amount. You know, when individual companies were taking hits, we've been seeing these big rotations. And one of the rotations that's playing out, again, we're getting out of Nvidia, all right? And the rotations literally save the marketplace, okay? Rotations into what? As I'm pointing out, the financials, okay? This has been the last few weeks, but the move exploded on Nvidia taking a hit. And again, you're not going to, you know, convince anybody of like, what's the fundamental reason of what? The financials ripping to the upside, of course, on Monday, because the rest of the market was getting hit. You know, the irony is, okay, you didn't see that so much inside of energy. That's been getting tagged a little bit. But there are stocks that just haven't performed lately, okay, that all of a sudden everybody's buying. And I'm trying to show you these rotations. You look at something like Nike, okay, like you're like, wait a second. So you're telling me they're selling Nvidia and turning around and doing what? Buying stuff like Nike? Absolutely unequivocally, yes. Okay, crap that no one's wanted to touch has gone parabolic over here. I'm just trying to make a point. It was like a really easy point to look at just like, okay, they're getting out of Nvidia and into Meta, and that one you can understand. But it was everywhere in the marketplace, people. It wasn't just like out of Nvidia into Meta or out of Nvidia and into some Amazon. Okay, because Amazon also was a bit of a beneficiary here. Like, take a look again at auto expected moves on Monday. And even though Amazon, okay, finished the day on Monday and kind of flat, okay, picked up its head on Tuesday. It's going to finish the week, though, slightly higher. But everywhere you look, you saw these wild rotations in. So it's the rotation game. Rotations literally saved the marketplace. But from my point of view, and here's the opinion portion, I think Nvidia was just the appetizer that the mega market cap unwind has really begun. As I started off on this video mentioning is, okay, can the marketplace really survive? I mean, a huge amount of the returns from the S&P 500 last year, okay, S&P 500 last year was specifically because of Nvidia. So if you look at Nvidia, as I said a moment ago, on the year-to-date basis, it's down 12%, but then snap that to a 3-year, little perspective, people, it's still up 392%, 392% over the last 3 years. So still absolutely stellar returns in here. But there's just no question in my mind that Nvidia continues to kind of be the linchpin. And what we've had, okay, you look at then at Apple, which is, you know, now, you know, basically once again your biggest market cap, it's reversed on its earnings, okay? And in this game of musical chairs, if you guys remember the game of musical chairs, what they basically do is you rotate, the music stops, okay, and there's less and less chairs. There's less and less chairs right now. Where are you going to go? You're going to rotate into Nvidia, okay? Oh, somebody might try to buy the dip in there. Yeah, well, anybody that tried to buy the dip this week, okay, we're towards the lows. All right, what did you do in Apple, okay? Earlier in the week, take a look at this. Earlier in the week, Apple was the only thing to buy. It was one of the ones they were rotating into until ultimately today. So nobody's going into the rotations in there, okay? Tesla. Okay, what does Tesla actually look like? This has actually struggled a little bit lately. It's really hard to actually support. There's no fundamental argument for Tesla right now, simply because their earnings were not great. Okay, and we go down the list of the usual suspects in here. You go to Microsoft. Well, that's actually the lower edge of the range. Where are you going right now? Where are you going to rotate to? And that's when you start, you almost have to go outside of tech. I'm telling you. I believe that the mega market cap unwind has begun. And what you're still seeing, though, okay, are these lingering effects. Okay, the marketplace literally holding itself at or near all-time highs, specifically because products like the financials have been rotated into. Here's the real key. Correlation is going to be the sign. Throughout the course of this week, even when the markets were tanking on Monday, the advanced decline line 50-50. There was actually a point in time where the advanced decline line was wildly on Monday with the S&Ps down 100 points. The advanced decline line actually had 70 products that were trading to the upside. because everybody's like, okay, get out of NVIDIA, rotate into anything and everything we possibly can. So correlation, though, is the sign. And I'm going to tell you right now, and we're close. What I mean by that is we're rotate. There's a 50-50 advanced decline line, rotate. There's a 30-70 advanced decline line, rotate. All of a sudden, we're going to snap again. We're going to snap, and you're going to see, for instance, 100 products to the downside. Okay, and we're going to go from rotate to just sell side activity. Okay, so if I am trying to bear up on you, absolutely unequivocally, the answer is yes, I am trying to bear up on you. Nvidia, okay, for me, really is it's the end of mega market cap. It's the beginning of the unwind, and it could be one of the more significant occurrences really in any recent history in this marketplace. I say recent history over the last couple of years. Okay, the reign of terror in this marketplace has been mega market capitalization. 3 trillion, 3.5 trillion. Okay, it's insane. I mean, if you looked at like Meta, for example, like how much market cap this thing added this week, this is a $600 product. Okay, basically hit 700. What's the difference over here? How much market cap thing added? I mean, it was basically flat. A couple of weeks ago, how much market cap it added in the last few weeks? 15%. This thing is closing in now, on like 1.75 trillion. Let's go actually look at it right now. There you go. $1.75 trillion of market cap. Okay. Just phenomenal moves in short periods of time. If you look at stuff like the financials, okay, for every bit that Nvidia has fallen, again, it's being shifted, it's being rotated into. You got to watch this correlation, because eventually what I believe is people are going to rotate, and then all of a sudden in one big gasp, there's some sell side activity. Okay, it's a very tough stance to take that at times. When you're looking at markets and you're like, oh, man, it's like an all-time high. Yeah, I'm a little bared up right now. Okay, so correlation will be the sign, meaning that you'll know that the selling is going to get extraordinary and it's serious if and when we really start to kind of kick into higher degrees of correlation to the S&P 100. Okay, positions that I like right now. There's still a lot of earnings to come, okay, from the likes of like Amazon. Okay, it'll save the day, or it could actually cause that sell side activity. Google, okay, could save the day, or once again, it could cause some significant sell side activity over here. For the most part, all the other big tech companies have been through earnings. Clearly, Nvidia is still a ways away. Okay, nevertheless, we're not talking about all the way at the end of February. I'm talking about right here and right now, the first, the second week of February, what this marketplace is going to look like. And I think it's going to be under heavy pressure. The easiest position I think to take for me, and I'm in it right now. I'm short the financials. I actually shorted into JP Morgan today as well. I like what I see in here for a short position in JP Morgan. I did enter into a bearish in-out spread in this earlier today. This thing's had blistering moves in back-to-back weeks outside its upper edge of the expected move. I think it's prime time for the short the financials. Why? Because this has been one of the beneficiaries of those rotations. And if the rotations stop, well, ultimately they're going to come for the financials and come for it in a big way. Now, okay, on the side of this, so I'm talking about Nvidia was just the appetizer, talking about these rotations kind of saving the marketplace. Obviously, I talked in detail about, heavier degrees of correlation over here being the sign, where you might be able to, consider profiting from, which is going to be the financials. Obviously, those of you that are members here at TheoTRADE, I'm constantly sending out trades on this particular front. I had trades like an XLI this week, okay? I've been playing the rotation game all week long. Trades in XLI, caught a bearish trade in there. I actually caught a bearish trade in XLV. Although XLV popped back to the upside, I'm already out. Out of the contest in the XLV trade profitably, and I had a bullish trade on this week in SLV that actually played out very nicely. I was out of it already yesterday. I'll look to go back to the table in any one of those trades, okay, as the week progresses. Now, before I jump in, okay, to the SPX and talk about risk for next week, I'll show you some other factors. Some other factors that are a little bothersome over here is you got the dollar a little bit bid, okay? Why? So I want to actually show you this. This has a lot to do with tariffs. Look, there's been a lot of discussion of tariffs right now, yada, yada, yada. You've heard it all before. The dollar doesn't concern me that much. What's starting to concern me is the bond market, okay? This today is one of the bigger moves to the downside that we've seen as of recently. The bonds are down almost a full point. If the bonds continue to see some sell side activity, that's going to add fuel to the sell side activity of the S&Ps next week. I'm not talking 2 weeks, 3 weeks. Like, we're looking into next week. You see sell side activity in these bonds, okay? All of a sudden, that fear is going to arise once again that interest rates are not going to back off. The Fed didn't do anything. You notice I kind of glossed over the Fed, yada, yada, yada. Who cares? PCE data? Nobody even cared about PCE data this week. Earnings? There was no earnings that really rocked the marketplace. No one cared, okay? The biggest thing that's on the table throughout the course of the week was Nvidia. This is the bottom line. But these bonds, they're going to start taking center stage. Seriously, they've been quiet lately. Look for them to take center stage. Why? Okay, because the next thing actually that caught my attention. Now, we all see the S&Ps right now with me live. They're down 35 handles, right? Take a look at the VVIX. Holy crap, that thing's gone parabolic. The VVIX is the volatility index. I'm not the only one that sees risk over here. People are starting to like add this up and they're like, yeah, there's risk coming. The VVIX, this is indicative of hedging activity in the marketplace. And it really lifted its head up off this today. And the S&Ps, they're not making a huge move right now. They're just not. They're down, 35 handles, okay? But something is definitely up, okay? Volatility also, okay? This is the volatility futures. They took off to the upside over here. Again, there's mention of tariffs. I get it. Nevertheless, the market's either overreacting right now or it sees that there's going to be considerable risk into early next week. Okay. Now, before I get into the SPX again, I want to cruise over to the S&P futures. I want to show you a 30-day 1 hour. I was talking about this a little bit earlier, okay, and how we were towards the upper edge of that range. But and I think this is really important. This to me actually looks like a bit of a volatility box that we're kind of in. So whether we're at the upper bounds or the lower bounds over here, what's going to matter? Okay, what's going to matter is if you crack your head above basically 6150, you start cracking below 5900. As crazy as it may sound, I was talking about this just 2 weeks ago. The critical level was 5911. 5911 inside of the S&Ps. Okay, you might think I'm nuts over here, but look, we're trading 6061. You get below 5911, it's going to get really serious in a hurry in this marketplace. And that's exactly how these volatility boxes work. When I talk about like a volatility box, what I'm referencing in this case, okay, is just this wild and unruly volatility channel. And it doesn't necessarily matter whether you're at the top of it or at the bottom of it. What matters is if you start to actually crack through, upper or lower. Obviously, in this case, I am leaning to the downside in here. And I think the marketplace sees it. That's why you're seeing some sell side activity in the bonds. You're seeing what? You're also seeing actually positioning in terms of volatility. Some traders getting long volatility out there as well. Bottom line, I don't think it bodes well for the S&Ps right now. Okay. Last but definitely not least, I always cruise to the SPX. Okay, the mother of all products. Oh, deep breaths. This has been a long week. So you started on Monday with a huge crack lower in the marketplace. We rebound substantially. Now, the entire week, this week that we just passed through, this entire week, you had roughly an $83 expected move, meaning we're supposed to move $83 higher, $83 lower. Yeah, we did that. And then some. I mean, we were almost 2 times outside the deviation out there. It was huge. But at where we are right now, we were unchanged on the week earlier today. We're slipping right now back, okay, to almost the lower edge of the expected move. So all of a sudden, once again, we're turning into Mr. Toad's wild ride of a marketplace. The reason I'm bringing this up, because you're looking at this and it's volatility like this, it's kind of exhausting. And when people talk about volatility, they're like, yeah, man, but we're in like 16 VIX, okay? You got to forget about that crap. You seriously got to forget about the crap. The VIX is useless. The VIX is only reacting, okay, very often after the fact. And traders get exhausted. They don't necessarily use the S&Ps, the SPX to hedge in anymore. So you're not going to see the VIX move until it's like too late. You got to look at other signs. You got to look at vol futures. You got to look at VVIX. You got to look at bond markets. But I'll tell you what you also can look at in the SPX itself. Okay, you just passed through 5 trading days. And in this 5 trading days, okay, we had PCE data, we had all kinds of earnings, we had an FOMC announcement, right? Okay, again, the DeepSeek issue, That the marketplace didn't see until like literally until over the weekend. But here's the kind of the shocking thing. So I'm already looking out, of course, to next week, and there's full week of trade. We have a $108 expected move. Now, are there some earnings coming out? Yeah, as I said a moment ago, we got a little bit of Amazon, a little bit of Google, but whatever. It's not, it is a critical week for earnings. But we just passed through the beast of a week for earnings. Why is the expected move rocking to the upside? And of course, you're going to say, well, Don, it's the employment situation. Nobody seemed to care about PCE data. Why are they going to care about the employment situation, right? Oh, there's a JOLTS number coming out. No one cares, okay? The data that's coming out, they're not really paying attention to. I'm telling you right now, the market sees something. $107, $108 expected move. Put on your big boy pants. We are not out of the woods, not by a long shot. Look, these S&Ps are lower right now, okay? But, even with 25 minutes left in the trading session, okay, let's not call it quits just yet. There's some time for some volatility still to play out over here. But again, it's not about where we're at right now, okay? It's about where we're going. And the one thing I can tell you right now, unequivocally, we're going and it's going to be volatile, okay? Because next week, as I said, markets do not handicap forward risk, okay, to $107 or $108 for nothing. Okay, there's clearly some risk in their marketplace, and you should expect it. Again, Nvidia crashes, but market rotations, they are hiding the real risks in this marketplace. Thanks everybody for joining us here at TheoTRADE. Have a wonderful weekend. Bye-bye.